Okay, time to do another stock market update, and it's an incredibly important week. Just as I say that every week, the subsequent week becomes more and more important. Let's start off with the US first of all. And what you can see there are the price earnings ratios or valuations of companies. Red means overvalued still. Share price relative to profitability. The share price relative to profitability, higher that price is, the more it suggests it's overvalued. Yet again, another week where energy and banks, and also there's just generally in the financial sector, are relatively undervalued, but that's only one measure of valuation. And performance, you can see, hasn't followed through on the lower valuation. It's been a bad week generally for the markets, though Eli Lilly, which I own, has been doing rather well. Actually, it's not me, it's my son who has, and I'd forgotten he had it. There you go. Price earnings growth ratio, energy stocks, again on this measure in green, suggests a price to or share price relative to profit growth below 1, which suggests they're undervalued. They're in green to make life easier for you, and there you are. You can see most of the market still relatively overvalued on those metrics. They're not the only things that move markets, valuation and momentum, but they're pretty important. So how is the market going? I'm just going to reduce the size of my face. And this is the S&P 500. Now, what I want to draw on this screen for you, some very, very, very important things that we have to draw. Here we go. Okay, you can see where we are roughly at the moment. And there's this downward channel in place now. That wasn't there before until the prices moved in this direction. Now it's there. You can see the monthly MACD, which is still lower. The weekly and the stochastics are oversold. In other words, their next move could be and should be upwards. This could and should be upwards. However, any upward moves are likely to be short-lived because the monthly MACD has the strongest force, and that's still pretty much on a downward path. So if you do get any moves up, it's not going to be long-lived, and I don't think option 1 is the most likely. I continue, I'm afraid, to think now option 2 is the most likely. You might say, well, why didn't you know that in January? Well, if you've been following these weekly broadcasts, we didn't know that in January. In January, I still thought, well, let's wait till next month, see what happens. And the month later, it was like, oh, it's still falling lower. Let's wait another month. Let's wait another month. Let's wait another month. Now it looks like this is the most likely scenario, but there might be other policy changes which change that. In other words, potentially, I'm not saying it's guaranteed, I'm not saying it's definitely going to happen, a 22% drop in the next year in the S&P 500. Potentially. That may well change. My near term, well, I'm going to wait. I'm just waiting another week. Let's see what next week brings. We should also get the updated approved filtered list as well. Let's look at some of the bellwethers to see if they can give us any clues. And what you see here with Apple is, of course, it's fallen much, much lower. I'm going to put that up on a different screen as well so that I can update this. And it's falling to this point B, which is what I said is most likely to happen. And it's sort of getting there. It's probably likely to bounce along here and go sideways. It's had a downgrade recently as well, which doesn't help, does it? But yeah, that's the unfortunate thing about Apple. It's where we stand at the moment with that one. And the best I can say at the moment with that one is we will not go below this upward trend channel. However, when we've had a look at other stocks where we thought that wouldn't happen, such as Microsoft, it has in actual fact happened. Given that it's happened with the others, I do not think that you should think to yourself, it won't happen here. In other words, it is possible that this goes below point B. Do not, what I'd say is just wait, okay? And that's because the MACD here is still not very clearly starting to bottom out. Might not, might continue going in that direction, but that's what we're seeing right now with that one. Okay, and that's an important bellwether. Microsoft, again with this one, the story sort of changed, and the story was this. We're probably looking at a fall from where we are right now, probably to about 10% to the downside further. And this downward channel doesn't mean it can't go up, doesn't mean it can't do this in that direction. Okay, it just means that we seem to be trading in this. We'll wait another week, see what happens. But that's where we are on that at the moment as my best best estimates. Okay, let's put it that way. Amazon, I know that looks an absolute mess, and in actual fact, what I'll do for next week is simplify it. There's no point putting on Amazon the sort of great upside benefits we might get. That's just not going to happen. So what's the point of looking at them? It just doesn't make sense. So I'll get rid of some of those upside moves. And what we can see here is with this one, we're probably going to, again, go to that bottom base. It could fall below that, so let's not get too excited. And option 3, that one is probably what it's going to do. It's just probably going to skid along there. Would I like it to bounce up and go to 2? Yes. Or 1? Yes, but we don't seem to be in that kind of market environment. A lot of buy recommendations from a lot of different brokers, which is nice to see, but really don't see that as being something which is the most likely scenario on that one for now, I'm afraid. So, as I said, for now, that's where we are on it. And it really gives a good bellwether of what's actually happening with the rest of the market. You hope and think it'll move up, but actually you're now just hoping it's going to keep on that support. So at least it's in an upward trend. Meta platforms, well, that's definitely smashed below those upward protections, and you can see it. It's now down, what, 63%? It's not gonna go bust. It's one of my so-called quality picks. Well, we'll have to reconsider that, and I might reduce my, well, in fact, I will reduce my quality picks to just Microsoft and Amazon and Apple, I think, and leave out Meta and Alphabet, given how much they've fallen. The reason they were originally in there to begin with, and by the way, it's at near its lows of COVID, the reason it was originally in there is you won't lose your money, and it was one of the, they've got so much capital. But now it's a different story now. It's really what we're looking at now with this is there's very little point looking at this in terms of keeping on that upward trend. It's that one's gone, and now it's just a question of how much lower can it go. Is it forming a base? Well, let's wait. It's not a company I don't mind holding. If it continues going back, even if it takes a couple of years to get back to its highs, and they probably will do something to improve their situation, let's put it that way. You are looking at 182% gain if it goes back to its all-time highs. And you might say, well, even if that took 5 years, Alpesh, I'll be happy with that. Yes, indeed. That's how the maths on it works. Okay, so let's move to the next one. Where does that leave us? Costco, again, as you'll know, one that I like. You can see it's just kissing that support. Will it go the way of Meta and fall below? There is no absolute way of telling. It's got a lot of pressure from the markets, and you've seen good companies do that, and it'll only be copying the other good companies if it does. If it does not, then you can see the direction in which it might go. Okay, PayPal fell off a cliff, bounced up, falling back up. We're probably looking at that direction. Let's just see what it holds. Interestingly for this, the MACD is very much forming a base. You can see that it's forming a base. You can see what it looks like when the weekly MACD rise. You can see when the stochastic has flattened and probably might rise. So this one is one which may well go along that line. The problem we've got at the moment is cost of living. Are you really spending that much on PayPal? But given how much it's fallen, it may well be more likely to move to the upside. Similar kind of story with this one in Johnson & Johnson, in that it's near that baseline. Again, you can see a lot of these stocks, they're near their bottom trend. Can they hold? Some of them haven't. Others may well do it. And then it's a question of, well, if they do hold on, what kind of returns are we looking at? And you might not want to get into Johnson & Johnson. It's just to give you an idea of how the market's moving, what's actually happening. You can see this one fell below it. So I'm out of Katera now. Sold out, as I told you, on Telegram, because I was only interested whilst it had that steep curve. And you might say, well, wait a minute, Alpesh, hang on. It may well, and I'm just going to do analysis as we go on, it may well just not have done too badly in that, okay, remove that and just redraw that line. Just draw it from a lower base and make it slightly different, just sort of say, okay, give it a bit more room. It might move back up yet. In which case, you're right, if I were to do that and give it more leeway, which I don't want to in this market for anything, but if I were to project that forward, I'm just doing the analysis on the screen as we speak, Well, even if it just went to all-time highs on that upward trend, that would give me a 51% return still on Katerra if it went back to all-time highs, keeping to this upward trend. So let's see what happens next week on that one, if it does it or not. Halliburton has definitely fallen below. You can see what I mean. That's clearly fallen well below. And you look at the monthly MACD, that could well fall even more. And so it's just one which I've said, okay, thanks very much. Not for me. I'm getting out, sadly. Now, some of you might say, no, it's a good company, Alpesh. Just hold on. Okay, so what if it's fallen below? Well, it's outside my strategy. My original strategy had been that it would just be within that channel. And once it's out of it, well, it's out of it. What am I going to do? I could always draw a line, fresh one, and say, well, what does that get me? Still a good return, 81%, even if it hits the top of that resistance. And you say, well, hang on, Alpesh, 81%, why don't you stick with it? And that's what people who want to stick with it will do, who are more risk-loving than me. Risk-averse like me will say, forget about it, I'm out of here. And again, Marathon Oil, similar kind of analysis to Halliburton. Occidental, I'm still in. This is where we are, and you can see the projections, and you can see the returns at B that I'm looking for on Occidental. I'll just make sure we're bang up to speed on that one. My team does this analysis. They go on and they do it for me each week. So I've just got to make sure they've actually, yep, that's up, bang up to speed. So we'd be looking at a 43% return in a year on that one, if it holds on. Otherwise it falls and we're looking at a 20% drop, which is not bad. Downside 20%, upside 40, okay. Again, you can see Devon, like the other energy companies, it's fallen below. Can it break back above? If it does, the returns are significant. So risk-loving will hold on. Risk-averse like me will exit. Marathon Petroleum, similar kind of story. Well, actually, this is within the upward trend, so you wouldn't look to get out yet. You just look at that and you say, oh, that's not too bad. In a year, I could get another 60% on that one. Adobe, I did a chart on only because I wanted to explain to people just how these things fall and what then happens. And what that looks like. Now, I've done a separate video on that, so I won't go into it. It's on Telegram. Let's look at Eli Lilly, which has been doing very well for my son. You can see here. And you can see it's not even close to the lower band. It's just going upwards. And you can see some of the support it's getting from the MACD as well. So there you go. He's got that. It's still there. I mean, it's been going up and down, but it's sorry, Eli Lilly. Did I say Debbie? Eli Lilly. So it's doing rather well, and he's doing well on that one. And he's happy. Well, I tell him he should be happy. He's getting toys, so he's happy. British pound, US dollar, where are we? Well, we're off the bloody scales on that one, to the extent that my team members have not even realised how to capture these things. So what's actually happening is, on that one, it's accelerated away so much that, as you all know, it's off the scales. As you will also know from my Telegram channel, I've been buying into it slowly. And those purchases have led to, well, I'd be looking at about a 16% return just on the underlying appreciation. But obviously, because Forex is leveraged, significantly more on that. And we are, as I speak, one spot 11. So some of those trades we got in at, we didn't get in at the low, which was one spot 03. My bad, because I should have put in buy orders were it to spike lower, which in actual fact it did. I think we got in closer to one spot 08, so we missed out a lot there. And I'm still a buyer of that, gradually, slowly, cautiously. United Health Group, similar story. I'm not going to repeat myself. You know what I'm saying. It's keeping to the upward trend. It's been doing well. You can see the next phase may well be upwards based on that, and you can see projections of gains. Okay, APA Group, similar story. Well, the market's pretty similar. Seasonal performance, I put this on Telegram just out of interest. What a lot of bad red months. How will October look? October, on average, over the last few years has been positive. It's actually been the lowest positive year. But, given the state of the markets, FTSE 100, what might we look at? Well, that's the worst case scenario at the bottom end. I don't normally look at the FTSE, but I thought I'd suggest it and look at it for you and where we are on it. Nothing that makes me think, oh, I'm so excited. Trader who made billions in 2008 buys pound near all-time low. Well, there you go. Former hedge fund manager is shot to fame for a $2.7 billion volatility trading. He's now buying the pound. Well, he's not the only one. I am as well. Oh, there you can see some of the pound trades. So those are the levels at which I bought them. I didn't manage to get it, as I said, at 1.04. That's my fault. 1.06. I should have just put those buy orders in at those levels. but that's where we are, and it's above that now. Pension fund crisis as gilts yields climb. There is a pension fund crisis. Your pension should be safe because the government just did a bailout of your pension. Market turmoil exposed vulnerability in the UK's pension sector. Pension funds would have faced mass defaults today. Why the many threatened to bankrupt pension funds? If that doesn't scare you, I don't know what does, which is why it's good you've got your own SIP and ISA. This is why you need to be well informed and well educated. Because one of these days you're going to give your money to a pension fund manager and they're going to come back and they're going to say, it's all gone, mate. Market timing can be costly. So for those of us who are trying to trade their investments, don't necessarily do that. Have a look at this. We're not trying to time it. I'm just giving you an insight each week into why something might be falling. You might be holding Microsoft, for instance, and think, I'm going to hold it for 12 months. What's the point of listening to any of this? Well, because you can just see why it might fall over the next week or 2 weeks, but eventually we'll get back. And this shows you what happens if you try and time things and if you miss some of the best days, how it absolutely destroys your returns. Okay, whoops, we've got one more. S&P 500 returns after falling 20% from record high since 1950. What happens 6 months later? Actually, 60% of the time it's positive after that, and we are 20% from record high. Average is a 4% return. After a year, it's 15%. After 2 years, 26%. Not too bad. So that's some good news to end on. Don't forget my campaignfor1million.com. The link is there to teach 1 million people how to be better investors. There you go. That's an even better image of that from New York, where I was last week. Was it last week? Something like that. Okay, so I hope you enjoyed it. Do give me feedback if you've enjoyed these and like these, because then I know to keep going and if you find them useful. Thank you very much.